Very good afternoon, everyone. Welcome to yet another uLaw webinar. And upfront, we'd like to thank you for accommodating the change in time. We do sincerely apologize for the technical difficulties that we faced, and the reason for our delay was that we had some difficulties with the tools that we were actually using for the presentation. So once again, thank you very much for accommodating the new time. And today's webinar, we're going to be talking about the bookkeeping compliance and the Law Society's guidelines for bookkeeping, and how the rules, the boundaries that govern the compliance aspects of it, and how you can be cognizant of these rules and policies and have a plan, an action plan to, by design, have a fundamental process to accommodate and deliver these compliance reports and run your practice in a profitable yet compliant manner. Okay, so we're going to talk about these bookkeeping guidelines and the compliance rules. Do want to iterate that today's webinar has been accredited for 1 hour of CPD credits by the Law Society of Upper Canada. So you are able to log into your portals and mark this as 1 hour of CPD. Okay. So moving along to the agenda, every uLaw webinar has an agenda so we can set the context, and today's webinar has an agenda as well. And the points or the topics that we're going to be covering today include the following. So first, we're going to talk about what are trust and general ledgers, and how do you maintain them, and the effort that it takes you to maintain them, what the expectations are from the Law Society, and how well you can plan and have your process in place to generate these trust and general ledgers. Okay, the different components and the attributes of these documents are going to be discussed as well with some examples, and we'll go from there. What are receivable and disbursement journals? Why do you need to maintain them? These are other set of documents that we outline within the Law Society's compliance. We'll talk about trust and general ledgers, very fundamental. We'll jump into receivable and journals for your disbursements. We'll talk about the whole reconciliation process. You know, can this process be simplified? How do we ensure that, especially if you're dealing with trust money, how do you deal with trust reconciliation, and really talk about the different components of that. And then we'll briefly touch upon what a fee book is. Really, a fee book should technically outline your entire revenue. I do want to make sure that you guys are able to see my screen. If I would request, if not, let me know and I can refresh it. But technically speaking, if you can refresh your screen, you should be able to have a look at my particular screens. And let me, for the purposes of our audience today, let me refresh my screen. And I kindly request that you use the phone number that has been provided to dial in into the uLaw webinar, because sometimes if you're dialing in from your computer, the quality of that is sometimes not great. And I hope you're now able to see my screen as I'm going to present it. Okay. As we were walking through the agenda, so we looked at the trust and general ledgers, the journals, the reconciliation report, the fee book, which truly is your revenue, including your disbursements. We'll talk about what that fee book should entail, contain within it, and why it'll maintain it. We'll also look at some of the other compliance documents, certain things that are very jurisdictional, but it does apply to Ontario or Upper Canada, such as the Form 9A. So we'll talk about every time you do make that trust transfer from your trust account into your general account, and if you're doing that through an electronic means of moving money from let's say, an electronic bank account of your trust into an electronic general account, and there's this Form 9A that needs to be filled out for every such transaction, okay? That's one of the policies, one of the bookkeeping guidelines, and your auditor would probably ask you for that if you are in the business of having a trust account, as well as in the business of moving money from trust to general through an electronic means. Okay, so Form 9A will look at the deposit slips, etc. And we talk about these being the core set of documents that are part of that bookkeeping compliance, the compliance documents that you would need to sign off on and make available on a monthly basis. So when time comes to audit, what we've heard is, your auditor, who is part of doing the LSUC audit, would randomly ask you for certain documents from certain dates and months. So having a discipline, having a process of delivering and managing these set of reports right from get-go on a monthly basis is going to be a very proactive step that you can take for your firm, so that you can have all the sanity possible during time of audit and be very confident about your audit going in. Okay? And last but not the least, we're going to look at the benefits of a legal accounting software. uLaw is one such software, and for the purposes of illustration or demonstration of some of these concepts, we may use the uLaw software to outline it, but there are other legal accounting software that we obviously do your due diligence, do your research. We are one such software, and we'll obviously showcase to you the benefit of using such a software and how it can help you not only with your practice management components, but can also manage and help you with all the documentation that's required to stay compliant. Okay? So it's a pretty much a packed agenda, if you will. So the first point in our, before I even get into what the ledgers and journals are within the compliance set of documents, want to kind of set a context to this. I want to give you a context of what the Law Society or the bookkeeping guideline rule, kind of outlines as the types of accounting systems that we've seen, from old school to now. If you really look at the different types of accounting systems and the options that you have, right from the old school manual double entry system. So this is a very manual step. One of the simplistic ways that you could actually do this by writing it on, paper. You look at the advantages and disadvantages of this system. It's simple. It's very inexpensive because you're not really paying for any software. You're just manually managing it and maintaining it yourself. But what are the disadvantages? It's extremely time-consuming, and especially if you're dealing with a large number of transactions, whether it's across a single matter or if it's across all of your matters. If you're dealing with, large number of transactions, then this is going to be an issue, because then you need to have, the time and the effort to manage that double entry system. Okay, and for one, it does not automatically subledger or automatically ledger to generate all those reports. You obviously have to do that, and with every manual touch point, you obviously lead to potential arithmetic errors. Okay, so that was the manual double entry, old school, and then it was improvised, or we matured to a one-write system. It does point to a subledger, so it's kind of a bit of an extension of the manual double entry system, with the only thing that's added to that is the fact that it does post to subledgers. But again, it's kind of manual, it's time consuming, and since it's manual, leads to arithmetic errors, and you obviously have to manage the whole transactions, especially if the volume is large. And then came spreadsheet software. We've all used it, and we continue to use it. It's a great tool. You use Excel, it's Microsoft Excel, a fantastic software that's used. It's relatively inexpensive, though there is a cost associated with it, right? Many legal professionals that we've come across, especially when they graduate or if they're just starting their practice, tend to use Excel sheet to manage and maintain all of their numbers. It's still a relatively inexpensive software. It does a lot of automatic calculations, so you could have formulas, summation, things like that. But then you have to be in control of what that formula means. And if you made an error with that formula, then that's your responsibility. It still does not take away the effort that's required to manage large number of transactions and the volume, especially if that's the type of silo practice that you manage. There is some level of training that's required because, for you to be able to apply those formulas and to be able to just use the software, there's a bit of training. And as I said, the responsibility of an incorrect formula is then left to you. It's kind of semi-automated, if you will, but it's not completely automated. And then came the advent of general accounting software. So you've got the general accounting software such as QuickBooks, and you've got Xero, and got all the other softwares similar to those that are meant for professionals, for businesses. Okay, but it was not fine-tuned necessarily for the legal industry, because that same QuickBooks could be used by a professional who's a plumber, someone who's a professional who's doing a small business, who's not in the legal business at all. So there's various small business ownership that's not necessarily a legal business ownership, but just a business ownership in general, who would take advantage of such general accounting software. It has automatic calculations. It can be relatively inexpensive and or expensive depending on your choice. From a cost perspective, the product will most definitely post your subledger. It would do a lot of your financial reports. It would also help you reconcile your general. But it was not meant to manage, let's say, with trust money. It also didn't deal with the compliance documents. It was never built or purpose-built to deal with legal business-related compliance documents, both for trust and general. And even with the software, training is required. Okay? And today, with the advent of technology, you do have general accounting software on the cloud as well. So you do have that option. Now, if you're dealing with trust money, and that's a big part of your legal entity business, and comes to one of your final options, which is your legal accounting software. It was purpose-built to deal with trust accounting and all of the nuances of the trust accounting and the rules that govern trust accounting. Okay, obviously has all the advantages of your general accounting software, but it's termed to be expensive and requiring a lot of training. So this is pretty much how the Law Society has termed these types of systems. Now, the term expensive, because you then had desktop software, which you need to buy a one-time license, and then you need support and maintenance, upgrade your servers, upgrade your computers, laptops, etc. But in today's context, in 2017 and moving forward, and as how we've advocated in all our webinars in our past presentations, it's a great time to take advantage of technology in the legal industry, because there's a lot of products, there's a lot of focus, and legal tech is growing, and it's only going to grow from here on. And what that's led to is a commoditization and a cost reduction, especially with such products such as legal accounting software moving to the cloud. And moving to the cloud allows for multi-tenancy in a very secure manner and gives you now that cost benefit, but with all the advantages that a legal accounting software provides as a fundamental DNA. Okay? So just to set the context, these are all your options. Having a software obviously helps you. There's a cost to be paid, but if you can do your research, you would find that legal accounting software on the cloud are relatively inexpensive for the value they provide. It's really money, best bang for your buck. But you do obviously have the option of doing this a manual way. And just to make sure, if you do it the manual way, then you have a process to generate all these reports and compliance documents that are required as part of your audit process. Okay? So one of our first agenda items today is talking about ledgers. So we're going to talk about trust and general ledgers and what does it take to maintain them. So we've taken a quick snapshot of trust ledger as well as the general ledger out of the bookkeeping guidelines, which in fact is a very interesting document to read. If you haven't already read it, I would highly encourage you to Google it, Bookkeeping Guidelines for Lawyers and or Paralegals in Ontario. And it's a very, very comprehensive document. And this is one quick snapshot from that document that really talks about the different components of what a ledger would look like, be it trust or general. Okay? So some of the commonalities that we've looked at, and that's what we've kind of outlined, and we can do a deeper dive later, but some of the commonalities that we've looked at is, every transaction, both received as well as dispersed, right, will need to be recorded in one or both of the ledgers. Okay? Each ledger, both trust and general, has a running balance. What that really means is what is the balance in that account per a certain date. Okay, so it kind of really goes by date and the balance during that date. And if you really look at the components of both the trust and general ledger, so let's first look at the trust ledger to your left. Okay, let me try and annotate this real quick. So if you really look at your trust ledger, the components there are obviously there are multiple clients. You've got the Kirby and then the Piper. But let's look at the components of it. There's got a date. All such ledgers do have a date. It has particulars. So the particulars outline what is, or it could be easily layman termed as description. So what is the description of that transaction? Okay, so it's a mortgage advance that's being put into your trust account. So it's received as $40,000. Okay, so on August 30th, the balance was $40,000 in this trust account, whereas for this particular client, and on August 31st, that was transferred to Taylor. Okay, so this is regarding a loan to Taylor, so money coming in and then money leaving the trust account, and the balance hence being zero. Another type of a transaction could be where you're receiving a retainer, so money in advance before you can actually deliver the work for your client, but it's received in trust. As the name sounds, you put that into your trust account. So there's a $500 fee plus your 13% HST of $565 that you've now received as trust money on the 5th of July. So on the 5th of July, that's the balance in Mr. Piper's trust account. Over the course of that week, you've obviously done all the work related to that matter, okay? And a week passes by. On the 14th of July, you actually deliver an invoice, which is invoice 002, for all the effort that you've put in, maybe a combination of effort, disbursements, etc., but let's just assume that it's effort for now, for simplicity. You raise that invoice. Once you raise that invoice, then you've moved your money from trust to general, and that's the money going out from your trust account and the balance being zero in your trust account for Mr. Piper. Okay? Now let's really look and flip this over. So there's a trust, ledger. There's a corresponding general ledger on the other side, right? And what does that look like? So on the 12th of July, so here's a little bit more truth. The truth being, the 5th is when you received the retainer. The 12th is when Mr. Leslie Lawyer, actually raised an invoice, which was invoice 002 for, as I said, a very important definition of the general ledger is defining the fees and the associated taxes that go to that invoice. So we looked at $565, and that was what was available in your trust ledger. But if I actually look at the general ledger, it divvies up between the actual fee and the appropriate taxes that are associated with it. So it was $500 in fees and 13% in Ontario, which is $65 of HST that was billed to the client. And then that money, after it was being invoiced, was moved from your trust into your general for $565. So the date remains to be the same, so there's some commonalities. The particulars obviously would change, but you still need to document it. If there were any expenses on behalf of the client, then that's documented as well. but in this case there were fees and then there was HST. Okay, so we've kind of summarized first what the trust and general ledgers are, fundamental documents of your compliance. Now let's move on to the next set of documents that are receipts and disbursements, and we'll look at both trust and journal. Okay. Now journals are records of a single type of activity, and this is just a definition, either receipt or disbursement, and are managed and maintained for both trust and disbursements. Okay. But in simple terms, just like the ledger, journal is another set of document that, for the same transaction provides some additional information and a different side of the truth. Okay. For example, the journals, in addition to managing and maintaining the date, also manages and maintains the method of payment and what was that for. Okay, so this was something that we did not look at when we looked at the trust and general ledgers, right? Because it's really not required in that document. Whereas in a journal is where you're going to now outline, okay, if you got paid, so let's say you got paid for the 565, who paid for it, what was the purpose, how was it paid? Okay, so let's look at the same example or maybe a different example in this case of the $565. If you look at Leslie Lawyer, on July 5th, Peter Piper, what was the client, what's the purpose of the fund, is a corporate retainer. Okay, what was the amount? 565, and importantly, what was the method of payment? Okay, this is a check. Likewise, if you look at a general receipt journal, so this was a trust receipt journal, and if you look at a trust disbursement journal, I apologize, you're going to look at the method, the date, same thing. And the reason I'm kind of getting into the granularity is if you don't necessarily have a software that can do this on its own for you, and if you're doing this the manual process, please keep in mind, you can have a structure similar to this in your Excel sheet or any other format that's really going to help you. Or if you're not using a software, kindly do look at the bookkeeping guidelines, document, and have your own manual process to maintain that. Okay? Very important. Method, this is really the disbursement journal, not the receipt. The disbursement journal talks about the date. Perfect. The method, you've got that. You've got a check. In fact, you've got a check number. Even better. Who was it paid to? Obviously, it's paid to the individual legal professional. In this case, it's Leslie Lawyer. And the purpose of payment. Okay? And if you can add the client information, even better. It was paid by Mr. Piper for the corporate legal fees, as outlined in the invoice 002, and the amount was 565. So if we look at our previous example, there's a payment that was made, and we're just looking at why that was made and the amount. So again, different set of documents. Now you've got, the trust receipt, the trust disbursement, you've got the general receipt, and the general disbursement. So 4 documents. So far, we've looked at the trust ledger, the general ledger, and 4 journals, making it 6 documents altogether. Okay? Now, a very important next document would be reconciliation. Now, for those legal professionals that do not deal with trust money, this is not a document you need to deal with. Okay? And this is, so if there's a general reconciliation, it's really not required. It's not a mandated law society document. What is mandated as a bookkeeping compliance document are the trust reconciliation reports. Now, there's obviously a lot of fear factor. There's a lot of confusion. There's a lot of buzz around the whole reconciliation process. How much of effort? How do I ensure that my the reconciliation is intact? To demystify that, we've tried to outline looking at a reconciliation report and kind of give you a stepwise guidance, if you will, for what these different components. Again, keeping in mind that any person may be doing this manually. It's kind of broken it down by steps of what you should consider putting in that report. Okay. Before I even get into that, let's just try and demystify the reconciliation process. It's truly an accounting procedure that demonstrates that you are recording everything that's happening as and when it happens, and you're marrying what's in your books, what you manage within, whether it's a manual or software, to the bank. So let's say today you have a bank account, and that's what really reflects what's happened in reality. The books or the software is trying to closely follow what's happened in real life. And this reconciliation report is now illustrating via this document how the books are as close as possible to real life. And if they're not, that's okay. You still can define why they're not as part of that reconciliation document. For example, if you sign off on a reconciliation, let's say on the 25th of every month, because the Law Society says do it every month end. We have legal professionals who we know who do it on the 25th of every month. Now let's say that 25th morning you received a trust retainer for, again, the $565. Now you inputted that, or you've accounted for that within your books. Or let's say you entered it into your legal accounting software as retainer received. Okay? So that's now going to reflect in your ledger. It's going to reflect as if now your trust account is richer by $565. Whereas in real life, maybe you still have not taken that check. Maybe the client paid you a retainer check for $565. You've in the books said that you've just received that money, but you still have not deposited that check into the bank. Okay? Maybe it's a Friday afternoon and you're not going to deposit till Monday. So the reality is, if you were to do a reconciliation report on Friday, the uLaw books, or the legal accounting books, would reflect the trust account being $565, as we know it, higher than what's potentially in the bank, because you've not deposited that money. And that's all you have to tell in that reconciliation report. The reason why the legal accounting or your books is richer in your trust account by $565 compared to your bank is because there is this outstanding check or outstanding deposit. That's there is. So you would catch that in your next month's reconciliation. Okay? So reconciliation is just stating the facts as it stands and providing the proof or providing the reasoning as to why, if at all, these two don't balance, providing the reasoning as to why they don't balance, and that's pretty much it. Okay? But the way that it needs to be captured, the different components that need to be captured to give you the full picture is what's outlined here as step 1, 2, 3, and 4. So what are those 4 parts? The first one is recording of the bank statements and the balances. So as of the date when you're doing this report, what was the balance in your bank? Okay. Step 2, recording of all the outstanding checks and deposits and any bank errors. So this is one of the examples that I provided you with, was any outstanding checks and or deposits. And you can see they all add up. So this is the checks 04, 05, 06. These are the total outstanding checks. And they all add up to $39,000. And that's what is being minused here. Okay? And there's actually an outstanding deposit of $250. And that's added. And apparently there's a bank error. And this can happen all the time. And there's 2 ways the bank error could happen. One is where the bank has accidentally taken money out of your trust account, in which case that needs to be reflected. For example, if you look at this, check 003 clear as 687 in the case of 78, but they corrected in the next month. So that $9 needs to be accommodated for, whether it's plus or minus. So you add or minus all of that, you get the reconciled trust account 171530, and that needs to add up to the third, which is the recording of your client's trust listing. Okay, so on the day that you do this reconciliation, for the clients and their files, their last activity date, and what's their trust money. Okay, and you're just comparing the reconciled mixed trust bank balance with your trust liabilities as per your books, and these two numbers need to match. And that's all there is. Okay? So the reconciliation report is again marrying your books to your real life. So this is your real life, this is your books, marrying these two and telling them if they're the same, or if they're not the same, why aren't they same? If they're the same, perfect, why are they the same? Okay. So we've now got a trust ledger, a general ledger, 4 journals, and a reconciliation report. That makes it a total of 7 documents so far as part of this compliance checklist of documents that you need to deliver. Now let's look at the next document, which is your fee book. Okay, and this is a great document to have anyways, right? And what is this fee book? The fee book records all of your invoices and disbursements. Very important that it's not just the invoices of your fees, of your legal fees. It's also the disbursements that have been raised as part of the invoices as recoverable from the client. Okay, so this one fee book talks about all the invoices, the disbursements that are being raised that have been recovered from the clients, either through an invoice, trust transfers, etc. The fee book also records the invoice number, which client was it billed for, and just like your general ledger, it accounts for the taxes or the HST or the jurisdictional tax that goes along with that you've collected. So here's a good example of a fee book by date, by invoice number, and each invoice number associated with the client. And you could have multiple invoices for the same client. Like in the case of Peter Piper, the actual fees billed. In this example, obviously, they have not considered any disbursement, but if there were any disbursements such as application fee, court fee, that are part of that invoice, then that's being separated out, if you will. It's a separate column by itself, and then the HST is billed. Some of these disbursements sometimes are tax exempt, so that HST is not included. If there is taxes with those disbursements, such as faxes, etc., then you obviously account for those, and the total that has been billed. Okay, fairly simple. Okay, so now we've got 8 documents. So that's the list of 8 documents. I'm not going to repeat myself. I don't want to bore you to death with that. There's about 8 documents so far that we've covered. And these 8 documents are fundamental. So keep that in mind, that you've got those ledgers, those journals, and the 2 other documents that we looked at, the fee book and the reconciliation report. Okay. Now let us look at some other compliance documentation that may be part of that mixture. If you do, and this is all situation-based, if you do so, etc. For example, electronic fund transfers require Form 9A. If you're not doing electronic fund transfers, if you're writing yourself a check, moving money from trust account into your general account, then you don't need this. But if you're doing this electronically, you have a TD bank account, and you have a TD bank account for your trust account, and you have a TD bank account for your general account, and you're moving that eligible trust money from one bank account to another online, then you need to record that. You need to record the different account numbers, what was the purpose, what was the client, and that's what's in the Form 9A. If you're getting cash deposits, or if you're doing cash deposits, then obviously you need to provide a receipt and a deposit slip. saying that you did deposit this into your bank. They would give you a slip. Make sure that you actually ask for it. Duplicate cash receipts. Again, sometimes auditors may actually ask you for that. Any verification documents, such as client ID verification. Again, it's not an accounting compliance document, but one of the important documents that we've seen as part of your client intake and the whole process that sometimes auditors do ask for are verification documents as well as conflict screening reports. So a verification document is how did you validate or verify that this client is actually Peter Piper. So you may have, there's actually a Law Society report that you, or a form, that you can download. That's again available to you in uLaw, but if you can download that from the web, and that form would basically outline, did you capture his driver's license? Was there a health card, passport? What information did you capture to validate that this was Peter Piper? We spoke about conflict. A very important aspect to a legal business is ensuring that there are no conflicts in representing your clients. And if there is, you're obviously explaining yourself as to why, even though there's a conflict, you are going to create a matter for him. So regardless, you would have to create a conflict report that outlines either there's no conflict, or if there's a conflict and you've captured that and have you've said no to this client, you need to capture that as well. If you know there's a conflict and you still want to represent for such unique cases, you explain yourself as well in that document. And your auditor, again, may ask you for those documents. Having them handy always helps. I recently read in a quote that I've always heard fortune favors the brave, but I recently heard a quote which says, fortune favors the prepared mind. So that's just kind of my 101 with that. Alrighty. So with another 20 minutes left, and I've been, through previous webinars, I've been asked to leave at least 5 or 10 minutes for Q&A. So I'm going to have another 10 minutes of me explaining through my slides, spending some time within, showcasing how you would deliver these reports within uLaw, because that was a request as well. And again, I'm just using uLaw for illustration purposes. So this was kind of be our couple of last set of slides. And what we're looking to capture in this slide is telling you, okay, now you know what documents that need to be managed and maintained on a monthly basis, okay? So this is not once a year. You have to do this on a monthly basis. The real question that you've got to ask yourself is, how much of time are you spending on this? If you're spending a lot of time doing this manually, then the question is, what can you do within your business to enable you to now go and invest in a software, a legal accounting software if possible, that can actually deliver all these reports and documents to you. It's definitely not a sales pitch, though it comes across that way. It's truly giving you the insight that using software as appropriate for anything in your life these days obviously is a big plus, because your time is invaluable, right? You're running around across multiple matters, multiple files. There's just so much to remember. To begin with, you want to give yourself cut some slack and give yourself a little bit of room, by automating whatever processes that you can automate. And this is just a way of telling you, here are the tools and here are the processes that have been automated for you that you can take advantage of. Okay? That's really the crux of the CPD and the crux of this webinar. So if you're doing this manually, every entry is a double entry, as you know. If there's a trust retainer, there's a debit credit, that's a double entry. You obviously have to ensure, if you're doing this manually, that you maintain that double entry system. Accounting is a double entry system, so you definitely have to, if you're doing this manually, please keep that in mind. If you don't have a system that can actually capture the uniqueness of a file or the uniqueness of a transaction, then you may actually end up repeating yourself or recording the same information in several places. You may actually, if you don't have a process of automating your file numbering system and making it unique all the time, you may actually end up creating the same file number for 2 different clients, which can be a problem. So again, are you then spinning your wheels to correct those mistakes? If you've done them manually, then now you have an option of using software to help you automate that. And if you look at the concept of seamless accounting, it's the concept of where legal practitioners are allowed to just deal with practice management and the accounting becoming almost behind the scenes. Okay, and the reason for you to move towards more legal accounting software is it projects the practice management to you, and the legal accounting does all of the accounting bells and whistles behind the scenes for you automatically. Okay, and that leaves you more time to be spent with your family, maybe researching other files, thinking about how you can grow your business. Staying confident and compliant by design right from the get-go. Okay, and we want to leave you with what can enable you or make this whole process simple. Reconciliation, again, being one of the key steps of the whole equation. And the 3 items that we'd like to leave you with is recording data as and when it happened. We stress upon this point quite a bit. Many of us being small business owners ourselves, we're strapped for time. But if there's a way that you can build a discipline, again, of capturing information as and when they happen. So it's either dockets or expenses or disbursements. Okay? And it could be receipts, meaning getting paid, or ensuring that you're moving money from trust to general. So there's only so much of transactions and types of transactions that you have to deal with. The problem really is the volume. So if you can find a discipline of being able to reflect the reality of what happened within your legal accounting software or any software or a system or an Excel sheet, and ensure that you're not going back to your memory. If you've not captured something that happened in October and you have to do that in January, then obviously you have to really trust your memory for that. And the advantage of using a software is obviously, as I said, I think I've kind of overkilled that point. The fact that, managing and maintaining these ledgers and journals and documents are automated. But as a data capture, again, if you can ensure that you're doing that reconciliation process, whether you do it through a software or manually, make it happen on a regular basis. With software now, you can even do it on a weekly basis. You don't have to necessarily wait for the month. You can do it on a daily basis if you're that particular, right? But make sure that it's the reality and your books are as close as possible. At a minimum, you have to do this on a monthly basis anyways. So don't wait for it to happen and for you to do it just before audit time, because then that's a lot of, adrenaline and there's a lot of tension. Save yourself all that by just having that discipline and doing it right from day one. Easier said than done, I know, but there are tools now that, it's not waiting for you to falter. It's not waiting to catch you on the wrong foot. It's there to help you, and that's the whole point. So, and we've spoken about this. Now, the fact that you know what you have to do to stay compliant in all those documents that you have to generate, the bottom line is that if you have a legal accounting software, you can be rest assured that as long as you're putting the data right in at the right time, that these softwares would enable you by giving you all these documents in a very automated fashion. Okay? Okay. So with another 15 minutes left, I'm going to spend the next 5 to 7 minutes just to showcase, all the compliance reports and documents that you can generate and how you generate that within the legal accounting software, which is using uLaw as an example. And I'd like to leave at least 5 to 10 minutes for Q&A, because it's a big part of the learning is to be able to understand questions from our audience and our participants, because that way we can all learn together. And for those who don't know who we are, uLaw is a legal accounting and a practice management software, proudly Canadian, based out of Ottawa, and we serve Canadian clients only. And we do offer 30-day trial, and please do explore, check out our website, and if you're interested, please do register for a 30-day sign-up. Okay. So now, moving from my slides, let me just jump right into a playground account that I traditionally use for all my demos. What I'm going to focus today is quickly look at my accounting report. So we looked at all those different bookkeeping compliance documents. So let's just start to generate them one at a time. To do that, let me quickly create a client so that I could kind of show you the whole transaction one at a time. Okay. Okay, there's already a first question. So looking at how do I generate all of these compliance reports within uLaw? Okay, that's not even a sales pitch question. Give me 1 second. The whole point of me doing this demonstration was to illustrate that. But I'm just going to try and refresh my uLaw 1 sec. What I'll do is I'll answer that question real quick. How do you actually go about which area within uLaw do you actually get to generate all those reports? And then I'll backtrack to add a docket and show you how you can actually generate that for a brand new client. Okay? I hope I still have some time left to answer your questions. So please keep your questions coming along so that I can answer them as I continue demonstrating it. Okay, there's a question about how do I enter a transaction where we buy an item or a service on our own personal credit card. Sure, I can do that. Let me first answer the question. So all of your bookkeeping compliance documents, legal accounting documents, at least in uLaw, and this may differ from each legal accounting software companies, within the context of uLaw, it's all under the document generation within our accounts menu. Okay, so in fact, we have a very simple panel called compliance. And it has the 2 ledgers. Okay, these are the 4 journals we spoke about, and we've really grouped it just the way they expect you to generate it, and some other which are very situational based. So if you're a real estate agent, real estate lawyer, then you may actually have an intermatter trust transfer. You may have a Form 9A, you may not have one. So to answer your question, let's say we generate a trust ledger. You're going to just generate for the month. But technically speaking, you do it at least once a month. And when you do it on a time period, it's important to note that you do it for all your clients, all of your active clients. Okay? So in uLaw, it's once you've entered the data through a practice management user screen, like the Matter screen, all of these reports and documents are just a click of a button. So we know that you've now generated the trust ledger for all your clients for the month of October. So this is very specific for the month of October. I'm using a fictitious law professional, Roger Moore, and here's his trust ledger, starting with the date. So if you really look at the template that the bookkeeping guideline provides, it's got the date by client. Obviously, by client, we provide some extra information in terms of what was the matter for, what's the file number. So if you have multiple matters for the same client, in this case you have not only an eviction of a tenant, you have another client, a divorce case for the same client, actually have another family law. So you really break it down by matter. But importantly enough, it's the retainer. So you receive that $1 million. That's the balance in trust. assets this month. Okay? Same thing which goes to the retainer for this particular matter. Okay? So it really breaks it down by client, by matter, for that date period. So I hope that answered the first question, which is really where do you have all these documents? So it's under accounts, document generation, compliance. Same thing goes for your general. If you look at your general, if you remember, we mentioned about one of the subtle differences between the trust ledger and your general ledger is in the general you also capture the HST received, apart from all the date and the particulars of that transaction. If you really look at the ledger document with the uLaw, it captures the date, the particulars, and the taxes as well. Okay. And then the 4 journals. And let me quickly look at the fee book, which is an important document. You can do it on a monthly basis or a date range. And as we mentioned earlier on, the fee book basically outlines by date, the client, the particulars, the actual fee, and the taxes involved. Okay? And if there's any disbursements, then that's mentioned separately as well. Again, because we serve clients across Canada, you've got some GST and PST as well. Good usually for our clients here in Ontario, obviously we use the HST account. Okay. Pleased to have your questions coming in with another 6 minutes still remaining. I'll jump into one of the other questions that were asked earlier on as to how do I reflect a purchase using a personal credit card. Now, with any legal accounting software or any bookkeeping software, you obviously want to represent these accounts or your bank accounts within the software so that it can marry to that particular real life account. So in the case of uLaw, your trust account obviously, or your general account, which is your personal credit card, would be one of the assets. Okay, in accounting lingo, you've got your assets, liabilities, capital, revenue, and expense. Your chart of accounts, they call it. And within the assets, you have your trust account, which is an asset, any money left in cash, any outstanding receivables, right? The one such asset is your personal credit card. As much as you want to think that it's a liability, the liability is really the payment, but credit card as an account is an asset. Okay. So let's say you have Amex as your personal credit card. So let's just go ahead and quickly rename it. And let's assume you've just bought some office supplies, you've just bought a printer, and you're using your personal credit card. Or, in some cases, if you're using, the owner's pocket, because that could be an equivalent of your personal credit card too. So there's 2 cases. One, you could be using a real physical credit card, which is your own, or you could technically use the owner's pocket, which is really your money, and then just use that. So, for example, you've got an expense, office expense. It's a printing and stationery. $100 for your paper purchased. Technically, I would use the owner's pocket. Again, depending on your situation, this is really your personal money, technically I would just use the owner's pocket account. You can actually have multiple in this. You could even say owner's pocket credit card, right? Because it's your own account that you're bringing into this business. It's always advised that you keep your business accounts separate from your personal accounts, If you can first make that judgment and then use either owner's pocket or you see some of our personal credit card as an account and basically say, yeah, you paid $88 with $11.50 as tax, and you've just reported that. So if you search for, okay, so if it's a business, okay, so the next question is, if it's not a personal credit card, it's basically a business credit card, which is smart because we've seen that as a trend now that every small business owner actually gets a business credit card so they can put all their expenses into this one card that's easy to reconcile, which is important, for all of your expense books as well. And you can create one such business credit card. So let's just call this business credit card, call it MasterCard, just CIBC. And the same thing applies. You're just going to reflect it in the bookkeeping software, some attributes about what really happened with that expense. The action, you're going to report an office expense, and let's say it was not printing, it was, let's say, office supplies, it was a printer, $1,200, okay, and you paid it to Rocks Inc. And most importantly, we ask you, how did you pay for it, right? So if it's all a bank account listed in your banks, then you're going to use your business credit card. You're going to tell this bookkeeping software that that's what you did, and the method being credit card, and CIBC would obviously give you a transaction number so that you can always refer it back. And you're just going to hit submit. Choose the date. So if you paid it earlier this week, then choose that. It captures the HST paid as well. So if I now go into my business credit card, I noticed right away that I have this $1,200 in my credit. Okay? And then you have your HST. If you remember, we paid that $11.50 today. Of that, that was the HST that was paid. So I hope that answers that question. Before I wrap up today's webinar, again, I sincerely want to thank you for accommodating this change. We also thank you for being part of such webinars. It's a great way for you to learn, not only on your CPD credits, but a great way for you to learn along with some other colleagues in this industry. We do have a link that we've published now in our chat that really talks about getting your feedback into making such sessions more meaningful. It's not as cliche as it sounds. It's definitely not to be a sales pitch for us as a company, but it's truly for us to be able to demonstrate through the product some of the core concepts that we firmly, and we can get the message across to as many legal professionals in Ontario, and the better it is. So please do use the Excel sheet that we've published to provide your prudent feedback, and we'll take the good, bad, and the ugly so that we can make these sessions in the future more meaningful and better, including a varied levels of subject matters. If you can suggest some other great topics that we can create content, we can then send it to the Law Society, who will be a great body to work with, who would then look at it, and if it's prudent, they would approve it for CPD, and that's how we do this. Okay? So please do click on the sheet. Do mark your attendance so that if we're asked for your attendance at a later time from Law Society, we have this as well. And please do provide us your feedback. And I do have a couple more minutes, and I'll leave the floor open for any more questions. Okay, I'll take this as the last question. Okay. The quick answer to your last question is yes. Though it's outside the context of today's webinar, the quick answer is yes. There is another question which would be interesting to ask. So it talks about how do I import my bank statement, or can I import my CIBC bank statement into uLaw, or do you have an automatic API interface with the banks in Canada? Okay, so the quick answer is we don't have an API that connects with your bank, at least not today. It's definitely something that we're looking to consider, but you are most certainly able to import, let's say, bank statements from CIBC or some of the leading institutions in Canada into uLawPractice, so that then it makes it easier for you to be able to deal with those individual transactions. Okay, so if I were to quickly show that before I wrap this up, so under our administrator, action administrator, import bank statement, you can tell us which bank account you're looking to reconcile. If this is really your business credit card, because you put all of that, now you're downloading the business credit card, CIBC, MasterCard's monthly statement. You can download it as a CSV file, okay, and then upload it into uLaw. And you can see we do support a variety of institutions across Canada. So you can choose CIBC. I think I particularly have TD as an example. And if you were to hit upload, what we do at uLaw, and it happens so fast you would think it's really not happening, but it's truly happening. We actually read the entire CSV file, and we bring out each and every transaction that has happened, right, into uLaw, making it easier. So if that's taxi, can quickly go in and say it's an office expense. You can tell us that you paid out of your credit card. Obviously, it divvies up the tax amount, and you hit submit. Okay? And if you were to upload the same file again, obviously it would tell you that it's already been taken care of. And you can be rest assured that if you've already entered this expense manually, then that would happen too. If I were to So if you notice, I used the same file number. If I do it from my same account, uLaw is smart enough, or the purser is smart enough to know that this was already imported, because it uses the text, the date, the description, the amount to say that if you've already done it, we're indicating that's already imported. Okay? I hope that answered that question. But we don't have the API yet, but I'm sure in the future we'll look into that. So with that, I'll wrap up this webinar. So thank you once again for participating, and we sincerely appreciate you joining in such webinars and CPD sessions. Once again, please use the CSV or Excel sheet provided, and we look forward to your feedback. Have yourself a fantastic Friday afternoon and a great weekend.